For this week's chart of the week, we're actually going to call it chart of the weeks, because for the last 6 weeks, this chart in particular has just been astounding. It has shown levels that have never been seen in history before, even going back to the Great Depression. So why don't we dive right into it and start looking at jobs. Now, of course, we all know that jobs are a major issue for driving our economy, as we are a consumption-based economy, as we talked about on last week's Trader Merlin chart of the week. But let's pull back the curtain and see what's been going on with the unemployment claims to maybe give us some clues about where this market may be going in the future. So let's start off with a chart of unemployment claims going back to 2000. And what this shows you is 2000 all the way through February of 2020, so just a couple of months ago. What I want you to notice is right during the Great Recession, when everything was going to hell in a handbasket, we had this significant spike in unemployment claims, which peaked out at about 680,000 claims in a week. Now, of course, on this chart, that looks like a massive anomaly. But if we fast forward to where we are today, you'll notice that we've been sandwiched really between 200 and 300,000 unemployment claims per week. Let's call that our baseline or normal that we are in this current economy, in this current market. So remember this scale. Look at the way that this picture looks right now. Commit it to memory, because I'm going to go forward and show you what it looks like today. Now, that chart, which had nice big fluctuations, is all of a sudden compressed because, boom, on the right-hand side of your chart, we've had significant spikes. Now remember, on the previous picture I just showed you, we peaked out at about 680,000 unemployment claims. That was here. Way down there. Well, I put 670, 680 somewhere. You know, dollar here, dollar there. It adds up to real money someday. What's crazy is in a very short period of time, we have spiked up to here at 6.648 million unemployment claims in 1 week. Now, this isn't the only important part about this chart. What's really critical is that when we look at the numbers, how they've stacked up. So here is the unemployment claims from the Bureau of Labor Statistics. I believe it's Bureau of Labor Statistics. You notice that down at the bottom, we're looking at about 250,000 unemployment claims. And it's always within expectation. But on March 26, we came out at 3.283 million unemployment claims. And look at the separation here. Remember, back during the peak of the Great Recession in 2009, we were only at about 680,000 unemployment claims. And here we are in 1 week. We're now at 3.283 million. Oh, but wait, there's more. We go to the next week, which is April 2nd. We jump to 6.6 million. Next week, April 9th, 6.6 million again. Moving to April 16th, you're now looking at 5.2 million unemployment claims. April 23rd is 4.4. And then on Thursday, we received the latest one for April 30th, which is 3.8 million unemployment claims. Remember, these are initial claims. These are people who are filing for the first time. So this isn't the same people over and over again. It's initial claims. What's crazy about this is the sheer number. You're looking at a total of over 30 million Americans have filed for unemployment in just 6 weeks. Put that in perspective. 6 weeks to have that much unemployment is absolutely crazy. Now, if we go a little bit further, I want to really drive home this point, because you're thinking, well, 30 million, what is that relative to? Let's look at it relative to the U.S. labor force. When we look at how many people are working in America, 30 million represents about 18.6% of the working American people. So right now you have a situation where just about, let's round up here just for entertainment purposes, about 20% of America is currently going, I don't have a job, I'm now going to be collecting benefits from an agency, which from my perspective will probably go belly up. Where are they going to get all this money from? Trillions of dollars. We put it in perspective by looking at one more chart, because this market's been on an unbelievable rally for the past couple of weeks. Why is that? It's because the Fed has been pumping trillions and trillions of dollars. Our government's doing all sorts of stimulus packages to help the economy out. But I want to put it in perspective. Remember that 18.6% of Americans are currently looking for work and unemployed. That means that there are other people who are unemployed as well that aren't really a part of that 18.6%. These are just the initial claims. So when we look at it compared to the S&P 500, this is really where it tells a story. This is the S&P 500 going back to 2012, and you can see we've had a pretty significant sell-off here in those past 4 months on the S&P. But that little blue line that I drew there is a 16.5% slide in the S&P 500. Now riddle me this, Batman. If we have 18.6% unemployment, initial claims, meaning people just fresh out of work, and the market's down 16%, to me what the saying is the market is pricing in a smooth transition, a quick switch. As soon as we can get out of our homes and go back to normal lives, hit that switch and everything is fine. I say no way. I wore this jersey for a specific reason today. I'm a San Francisco Giants fan, a San Francisco 49ers fan. And let's just look at the prospects or how this is all going to unfold when we finally get out of our homes and go back to work. Are we going to be able to go see the San Francisco Giants play in San Francisco in a 42,000 seat venue? No, they're not allowing us. So if it's 42,000 seats, each seat's probably 1 foot apart. What are we going to have now? Ball games that have maybe 6,000 people there? Think of all the jobs that are impacted by that alone. All the vendors, all the distributors for the food, the beer, all that stuff, parking, all of that is going to be going way down with regards to revenue, meaning what? More people are going to be unemployed. So it won't be a smooth transition to the way that things were. So to me, it's crazy to look at a market that's down only 16% when just the unemployment claims alone are teetering at close to 20. We will probably see next week that number jump again and move it closer to that 20% initial claims number for the working force in America. To me, that's the chart of the week. That might actually be the chart of the year as this number continues to have huge impacts for our economy. And wait till we get to Q2 earnings. When Q2 earnings roll out, we'll really see the impact of those unemployment claims. We'll see you guys next week on the chart of the week. If you'd like to learn more, visit TraderMerlin.com or join us live on our show every day, Monday through Friday at 2 p.m. Pacific on YouTube.